Hello viewers, welcome to my channel. I am Hasham Ali Khan. So far 11 accounting standards I have completed in the previous videos. In this video I am going to start accounting standard 12, that is government grants. So hope my regular viewers have already watched all the earlier accounting standards which I have explained in detail. So if you have not watched those accounting standards, I suggest you go to the playlist of my channel, select the subject accounting standard, watch all the videos. Apart from that, I have solved a number of problems on AS2 to AS9. Already all these videos I have already uploaded. Be acquainted, be perfect on the provisions of all the accounting standards. And this subject is very important not only for graduation, post-graduation, but also for professional courses like CA, CMA, CS, etc. Now, before starting this accounting standard 12, government grants, take the screenshot of the points which I have written on the board, then I'll explain all the points in detail. So watch the video till the end. Now, AS12, government grants. Government grants refers to the assistance given by the government to an enterprise for compliance with certain conditions. If an enterprise satisfies some conditions, the government will give assistance to the enterprise. So simple words, government grants are the assistance given by the government to an enterprise for compliance of some conditions, and they are sometimes called subsidies or cash incentives. The different names are there: government grants or subsidies or cash incentives, which are given by the government to an enterprise for the past or future compliance of some conditions. That is the meaning of government grant. Now, government grant excludes government assistance that cannot be reasonably valued. So there is a difference between government grant and government assistance. Sometimes government will assist an enterprise which assistance cannot be valued precisely. That assistance given by the government which cannot be evaluated, which cannot be calculated precisely, that will not be governed by AS12. Then transactions with the government that cannot be distinguished from the normal trading transaction. Some enterprises will have normal trading transactions with the government. That means the enterprise is dealing with the public and also dealing with the government in normal trading transactions. Again, whatever assistance given by the government will not be covered under government grants of AS12. Next is AS12. Actually, AS12 describes the accounting treatment. This accounting standard 12 explains how accounting treatment should be done when government has given some grants. In the financial statements of the enterprise, how these government grants should be dealt, should be disclosed. That's what AS12 explains. So what AS12 explains? Non-monetary grants, that means grants given in kind. Secondly, grants related to specific fixed assets. Sometimes a fixed asset will be purchased by an enterprise. For purchasing the fixed assets, the government will give the grant. Example, suppose a machine, pollution controlling machine. So government has given a notification that if any business purchases a machine, pollution controlling machine, then we will contribute some assistance. Some assistance will be given by the government. So these are called grants given for purchasing the fixed assets. Now, grants relating to revenue or promoter's contribution. Sometimes the promoter is going to start the business, but government is also contributing some revenue towards promoter's contribution. The last one, treatment relating to refund of government grants. Sometimes the government will give the grant, but due to not compliance of the conditions, the government will refund the grant. So what is the treatment for refund of government grants? So these are the topics which are going to be covered in AS12. First of all, it does not deal with, specifically given that AS12 does not deal with the following situations. Some situations are there. What are those? First, accounting treatment for grants in financial statements reflecting the changes in prices. Suppose if there are changes in prices, so how the financial statements will get affected? So any grants in financial statements reflecting the changing in prices, that will not be dealt with AS12. Secondly, other indirect forms of assistance. Apart from these grants, sometimes the government will give the assistance in the form of tax exemptions, in the form of tax privileges, or tax breaks. Like this, some different types of assistance will be given by the government to the enterprise that is not covered by AS12. Next one, government participation in the ownership of an enterprise. Suppose if the organization is owned both by the private as well as government, that means government is contributing towards the ownership of the enterprise. That is also not covered by AS12. So these three situations are there on which AS12 will not apply. Next one, recognition of government grants. When we have to recognize, when we have to, include the government grants in the financial statements. Government grants should be recognized when there is reasonable assurance. First of all, AS12 says the government grant should be recognized when it is assured that the enterprise will comply with the conditions attached thereto. So government will never give the grant without any condition. The government will say that if an enterprise comply with some conditions, then only government will give the grant. So first, in order to recognize the government grant, we have to see whether the enterprise is complying with the conditions or not. Secondly, the grant have been earned by the enterprise. Secondly, in order to recognize the government grant, we have to see whether the enterprise is complying the conditions or not. Thirdly, the grant will be received. So government grant will be recognized only if it is received. So these three conditions are there for the recognition of the government grants. Date of receipt of government grant is not relevant for recognition. We are not specifically concerned with the date of receiving the grants. Once if it is received, once if it is earned, it should be recognized. That's all. Now, recognition of government grant in specific cases. Now, see carefully. If the nature of government grant is in the nature of immediate financial support to an enterprise, then it is recognized as income in the period in which enterprise qualifies to receive it. Sometimes the government will give the grant to assist the enterprise, to give the assistance to the enterprise, financial support in the form of financial support. So we have to see when this financial, when this financial support is given. So accordingly, we treat it as a revenue income and take it in the profit and loss account. If the nature of government grant is in the nature of compensation for expenses or losses in previous accounting period, then it is recognized as income in the period in which it becomes receivable. Sometimes the government will give the grant to compensate for the expenses or to compensate for the losses. Then AS12 says we have to find out in which accounting period these expenses were compensated, the losses were compensated. Accordingly, in that accounting year, the government grant should be recognized. Now, grants related to specific fixed assets. Here I told you in 4 cases this AS12 will apply. So one of the case, second case, government grants related to specific fixed assets. when an enterprise purchases a fixed asset, sometimes the government will give the grant for purchasing the fixed asset. For example, a machine, pollution controlling machine, the cost of the machine is, let it be 10 lakh. But the government have given the notification, if any organization, if any enterprise purchases this machine, we will contribute 40% of the cost of the machine. That means the company has to spend only 60%. 10 lakh rupees is the cost of the machine. 6 lakh rupees will be borne by the company. 4 lakh rupees will be contributed by the government. This is called government grant in respect of fixed assets. So two categories are there, two methods are there. There are two methods for accounting for grants related to specific fixed assets. The first method is alternative one. Grant is shown as a deduction from the gross value of the asset in arriving at its book value. First method. The grant received should be deducted from the cost of the asset, and the net book value should be shown in the financial statements. Example, if the machine cost is 10 lakh rupees. Out of 10 lakh rupees, 4 lakh rupees are contributed by the government or given the grant by the government. So deduct 4 lakh, 10 lakh rupees is the cost of the machine, 4 lakh rupees is the grant received. Deduct 4 lakh, remaining 6 lakh rupees is the book value. So the machine will be shown as 6 lakh rupees in the financial statements. And if the grant is equal to the cost of the asset, then the asset will be shown in the balance sheet at a nominal value. So what the AS12 says, if complete amount is received in the form of government grant, then we should not take 0 as the book value. The book value will be shown as a nominal value. Example, if 10 lakh rupees is the cost of the machine and complete 10 lakh rupees is given the grant by the government, so 10 lakh minus 10 lakh, 0 is the book value. But the AS12 says don't show 0, take it as a nominal value. For the sake of writing, we will write on only 1 rupee. Only 1 rupee. That means instead of getting 10 lakh from the government, we got 9,99,999 rupees. The government grant will be treated as 9,99,999. That means 1 rupee is left. So we'll show book value as 1 rupee. This is the first method of treating the government grant when it is received for purchasing a fixed asset. Second method, alternative 2. See carefully. Grants received to depreciable fixed assets are treated as deferred income. Sometimes the government will give the grant and the grant will be treated as a deferred income. So every year a part of that government grant will be treated as income. Remaining the grant will be shown as a liability. Now, the grant is taken to income over one or more periods on a systematic or rational basis. We will not deduct the grant from the fixed assets. We treat the grant as a deferred income. So every year a part of the deferred income will be taken to profit and loss account. Now, when grant received to non-depreciable fixed assets like land, the amount should be credited to capital reserve. So there are two types of assets, depreciable, non-depreciable. If depreciable asset is there, we can deduct that grant from the asset or we can treat it as a deferred income. If the asset is non-depreciable asset like land, the enterprise has purchased the land. For purchasing the land, the government has given the grant. So this grant should be credited to capital reserve. It should not be treated as deferred income. It should be treated as a capital reserve because the grant is received for non-depreciable asset. Now, unapportioned deferred income is shown separately in the balance sheet as deferred government grants. That's all. This is second, alternative 2. Now, revenue grants. Revenue grants means the financial assistance which is regularly received from the government. Every year, every now and then, received the grant from the government. It is called revenue grant. So how to treat? Government grants related to revenue must be recognized on a systematic basis in profit and loss account. Because it is a revenue grant, It is a recurring grant, so it should be treated, it should be taken in the profit and loss account as a revenue income. Such recognition should be spread over the period necessary to match them with the related cost. So actually, we have to compare, we have to apply the matching principle where the grant should be related with the cost. So on a systematic, on a rational basis, the income should be matched with the costs. Then such grants should be shown separately either under the head other income or as a deduction from the related expense. So when revenue grants are received, it should be separately shown in the profit and loss account as other income, or this revenue grant should be deducted from the concerned expenses. So these are the provisions regarding revenue grants. Now next thing is promoter's contribution. Sometimes the government will give the grant in the form of promoter's contribution. That means a new business is set up. In the contribution of the promoters, some part is contributed by the government. So in that case, what accounting AS12 says, government grants in the nature of promoter's contribution are grant given with reference to the total investment in an undertaking by way of contribution towards the total capital outlay, and no repayment is ordinarily expected in respect of thereof. Example, a new project is being started. The cost of the project is, let it be 50 lakh. The government says we will contribute 10 lakh rupees to this project and it is not being refundable. That means this 10 lakh rupees contributed by the government for setting up the new plant is not required to be refunded. Then this contribution, how it should be shown? Such grant should be credited to capital reserve. So when the grant is received for setting up a new plant as promoter's contribution, should be treated as a capital reserve, should be credited to capital reserve. Lastly, refund of government grants. Sometimes the government will give the grant, but the enterprise has not complied with the conditions. Then the government will take back the grant. That is called refund of grant. So what are the provisions regarding refund of grant? A government grant can become refundable if certain conditions are not fulfilled. Remember, the government will not give the grant unconditionally. The government will give the grant only on satisfying some conditions. So later on, if the enterprise has not complied with the conditions, the government will take back the grant, refund of grant. A government grant that becomes refundable is treated as extraordinary item as AS5. In Accounting Standard 5, we have explained about extraordinary item. So whenever there is refund of government grant, it should be treated as an extraordinary item as per AS5. Then the amount refunded or refundable should be first debited to unamortized deferred credit remaining in respect of such grant. Suppose, if example, deferred income, we have received the grant and put it under deferred income. Put the amount under deferred income. Later on, that grant was returned, that means refunded. The government will take back the grant. So in that case, we have to debit the account. Which account? Deferred income account. So when we receive, we have credited deferred income account. When the amount is refunded, the deferred income account should be debited. Then the amount refunded or refundable should be first debited to unamortized deferred credit remaining in respect of the grant. Refund in excess of such deferred credit is charged immediately to profit and loss account. Sometimes excess amount is refunded. Actually, we have received the grant for 2 lakh. But we have to return back 2,20,000 along with fine or along with interest. That means whatever excess grant we are refunding, that excess amount should be immediately charged to profit and loss account. The amount refundable and relating to specific fixed asset should be accounted for by increasing the book value of the asset. Sometimes the government, the enterprise has received the grant in respect of fixed assets. So when the grant is received, the grant was deducted from the cost of the asset. But later on, when the grant was refunded, we have to add back the grant to the book value. Example, 10 lakh rupees was the cost of the machine, for which 4 lakh rupees grant was received. So when we receive the grant, we have deducted 10 lakh minus 4 lakh, 6 lakh rupees book value we were showing. But later on, the government has refunded, taken back the grant. That means the enterprise has to refund the grant. In that case, we add up 4 lakh rupees to the book value of the machine. Now the machine will be shown as 10 lakh, not 6 lakh. Now, if a grant which is in the nature of promoter's contribution become refundable, such amount should be reduced from the capital reserve. When the grant is received in the form of promoter's contribution, we have already credited the amount in capital reserve. Now, if this amount is refunded, then capital reserve account should be debited. When we receive, capital reserve account was credited. When it is refunded, capital reserve account should be debited. So these are the provisions regarding AS12, accounting for government grants. So hope the points are completely clear. Confidently you can write in examination about this AS12. Don't watch only once. Watch the video twice, thrice, 4 times. Then only you can be able to get all the points in your mind. Inshallah, we will continue the next accounting standard in the next video.